Hey everyone, and welcome back to Everything Tesla Stock. Want to know what's really going on in the world? Worried about what might happen in the next few months or years? Check out this recent update from Cathie Wood. She's the CEO and Chief Investment Officer of ARK Invest, and one of the most influential stock analysis experts of our time. And she's got some pretty dire predictions for the stock market. She's also an expert on all things financial and economic. In this riveting video, she states that we are already in a recession and that everyone will be terrified in the next 2 weeks. And that while recession warnings have been piling up in recent weeks, most of them have a timeline of 1 or 2 years. So if you haven't started preparing yourself yet, then you definitely need to start soon. Let's hope that her prediction is wrong, and if you're interested in what she's got to say, make sure you watch until the end. Let's hear what she's got to say then. Before we start though, if you like this type of content, hit the like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. Wood, CEO of ARK Investment Management and manager of a number of innovation-focused exchange-traded funds, is one of Wall Street's most vocal supporters of Tesla. Tesla stock is one of the most valuable investments in ARK Autonomous Technology and Robotic ETF, the second most valuable holding in the ARK Innovation ETF, and the fourth most valuable holding in the ARK Next Generation Internet ETF. The funds collectively own about 1.3 million Tesla shares, worth $911 million at the current market value. Due to the overall tech sell-off, this holding has dropped from a high of around 5.6 million shares, leading Wood to cash in some early profits. However, as a result of Tesla's recent stock split, ARK now owns more than 1 million shares. While most investors are concerned that the US will enter a recession next year, ARK Investment Management founder Cathie Wood believes one has already happened, and that it will be over by next year. While many economists and strategists have been resisting the notion that we are in a recession and believe the US will enter one next year, we actually think we'll be coming out of it in 2023, she said. "We think we are in a recession," Wood said on CNBC's Squawk Box on Tuesday. "We think a big problem out there is inventories, the increase with which I've never seen this large in my career. I've been around for 45 years. According to Wood, supply chain interruptions and geopolitical risks have caused inflation to be higher than she had anticipated. We were wrong on one thing, and that was inflation being as sustained as it has been," Wood said. "Supply chain. Can't believe it's taking more than 2 years, and Russia's invasion of Ukraine, of course, we couldn't have seen that. Inflation has been a bigger problem, but it has set us up for deflation. We think we're in a pretty significant inventory recession, but we don't think it will be anything like the systematic recession and financial crisis in 2008 to 2009, she said. It'll be more of a garden variety. According to a 2008 analysis by the Federal Reserve Bank of San Francisco, the average US recession lasted 10 months from the mid-1940s to 2007, with the shortest lasting only 6 months. Inflation measured by the Consumer Price Index rose 8.6% in May from a year ago, the fastest increase since December 1981. Wood stated that consumers are suffering the effects of quick price hikes, as evidenced by sentimental data that has dropped to historic lows. She cited the University of Michigan's surveys of consumers, which showed a reading of 50 in June, the lowest number ever. Wood asserted that innovation is recession-resistant, citing the recent tilt back towards growth stocks as evidence of this tendency, citing their better growth rates to the rest of the market, which tends to be more influenced by the cycle. The popular investor has had a difficult 2022, with her disruptive technology darlings among the greatest losers this year as investment rate rises. Her flagship active fund, ARK Innovation ETF, is down 52% to date, and it's also dropped 66% from its 52-week high. The fund gained 13.2% in July, but has suffered significant losses this year. According to FactSet statistics, the fund plummeted more than 5% on Tuesday, increasing its year-to-date loss to about 49%. What we do see in these earnings results is that we are in a recession. We think this is an inventory-led recession, and I think that's coming through loud and clear. We're seeing advertisers cut back dramatically, Wood said. Recent earnings reports from Snap and Meta platforms revealed that advertisers have certainly slowed their spending on those platforms in recent months, while Walmart and Target have warned that excess inventory will eat into their profitability this year. Nonetheless, Wood claims that her clients are generally sticking with her, and actually that they are seeing new funds and they're flooding in as investors seek diversification in a down market. According to FactSet, ARK received more than $180 million in inflows in June. I think that inflows are happening because our clients have been diversifying away from broad-based benchmarks like Nasdaq 100, Wood said. We are dedicated completely to disruptive innovation. Innovation solves problems. Major US stock indexes have also fallen this year. The Nasdaq Composite Comp has also dropped more than 20% this year through Tuesday, while the S&P 500 SPX has dropped 13.5% and the Dow Jones Industrial Average DJIA has dropped nearly 10%. While the July CPI data could be flat, slightly up or slightly down, Wood expects inflation to moderate in the coming months. In her career, gold GC00 has been a great leading indicator of inflation, with many people surprised to hear that the yellow metal's price peaked in August of 2020. Wood also mentioned the recent drop in oil prices, CL, as well as the decline in copper HGOO and energy expenses. She also said that companies' blown out inventory could lead to cheaper prices in the coming months as they strive to get rid of it. The Adobe Digital Price Index, which focuses on e-commerce, recently decreased, which Wood attributes to the inventory overhang out there that companies are attempting to fix right now. In her opinion, innovation, particularly technologically enabled innovation, is deflationary, but it's positive deflation, Wood pointed out. Wood's opinion on the current state of the US economy varies from that of the Fed chairman, Jerome Powell, who stated in June that he sees no sign that the US has entered such a recession. However, Powell and the Fed are primarily concerned with trailing signs such as the labor market and inflationary readings such as CPI, according to Wood. This implies that the Fed is unlikely to recognize the economy is in a recession until it has already occurred. Wood instead focuses on leading economic data to support her prediction that the economy will decline further and inflationary pressure will ease. If you look at initial unemployment insurance claims, they're up 50% from the low. So I do believe we're going to see some significant disappointment in the employment numbers moving forward, Wood said. Furthermore, gold prices peaked in 2020, which is a key indicator of inflation. And copper prices have fallen significantly, which is also an indicator of economic activity. All of these are signals that inflation is going to come down. It's going to come down significantly, and we're probably going to see some deflation, Wood said. According to Wood, ARK Invest's flagship fund has bottomed, and this situation could set up for a decent recovery time in the future. Typically, growth stocks will outperform as we move towards the end of a bear market and the end of a recession because they are the new leadership, Wood said. It looks like we bottomed on an intraday basis based on our flagship strategy on May 12th. The bottom of ARK's flagship fund occurred about 1 month before the Nasdaq 100 and S&P 500 reached their all-time lows this year. That's an early indication that we might be turning a corner here, Wood said. That would be good news for ARK investors, given that their flagship fund is down almost 70% from its February 2021 high. However, Wood may not be out of the woods yet, as some of her top holdings, including Roku, Teladoc, and Coinbase, experienced substantial drops a few weeks ago, owing to earnings and SEC investigation. But what are your Tesla predictions? Let us know in the comments section below, and thank you for watching. While you're still here, go ahead and click on one of these two videos on your screen. See you there.